All right, on Twitter here. And yeah, so here we go again. Another week ahead of us. Futures are opening pretty deep in the red here, with the VIX pointing in the green. So that is looking pretty bearish as of right now. Of course, anything could happen overnight. We've seen this before, where we gap down in the middle of the night. By the time we open, we're green again, right? So let's see. I kind of have the SPX, the S&P cash pulled up right here. Just kind of want to just take a quick look, just a review here of this channel the entire year, right? So we started off the year heading into 2018, pretty good, and then February kind of came around, right? At a kind of a flash down, up and down, and then kind of worked its way up back again, all the way to the top of the channel, and then boom, back down, right? Hits channel to the tick, jumps up, and then now here you can look at sort of the Elliott wave setup right here. So we have a one wave down, right, and then an ABC to form wave 2, right? And now it looks like we're jumping into wave 3. It could be 1, 2. We could be in part of a a 3 of a wave 3, which should, in my opinion, well now we're going to be gapping down, right? Should push us below this channel, right? And so I tweeted out earlier, last time when we hit this and we bounced back up again, I said, watch out if it hits as a 1, 2, 3, 4th time and fails, right? And so it looks like it pretty much did that on Friday, and now we're gapping below it. So what does it mean? Does it mean look out below? It very well could. So we just have to see. We just have to now start looking at levels, where we open up. So we're showing 2613, 2600 has been a pretty key level right here. You can see a lot of things match up, right? We've already broken through this this pitchfork low. We're breaking through the channel. We're going to be gapping below it, right around here. And I did another pitchfork earlier just to show it counter perspective of it, and we're basically hitting that median line. So, and that's all converging right here at 2600, right? So I would say, if you go to your 60s tomorrow and you see some sort of solid shooting star shooter that gives you potential momentum setup, there could be some good shorts tomorrow, right? Of course, market likes to trip everybody up. It could act like it's going to go down, then rip right back up, right? So we just have to pay attention to price, go with the time frame that you're most comfortable with, and trade actionable setups, right? So if you go to my Twitter feed, you can see all the good stuff of how to trade 60s. It's my favorite one to trade. It just gives you more confidence. You don't have to feel like you're missing out. You can just trade the best setups, right? We even looked at that last week. Looking at just the Qs the other day, there was a just an awesome hammer that you could have taken at the end of the day and made a quick 2 points and been good to go, right? That's all you had to trade all day, right? So so you don't have to try to trade everything, just trade the best setups, right? And then preserve profit, move your stop up once you're profitable, and stay profitable, right? And then limit all your losses. So do that consistently over time, you'll do well, right? So anyway, so tonight just wanted to we've been watching the market go down and everything like that for a bit, so I just wanted to kind of just touch on some educational points. Wanted to talk about some popular momentum indicators that are out there, right? You'll see them a lot all over Twitter, possibly in your own account, other accounts. I post them up there too, and they're interesting to look at. And we'll look at a couple different ways to use those, and possibly some of the more effective ways. But anyway, so tonight we're going to look at RSI, we're going to look at Stochastic, and we're going to look at MACD, right? I'm not a super expert on any of these, but I'll just kind of go over some basics, and hopefully give just a little bit more understanding of it, and then hopefully you can use it to help your trading too in the future. So going to go over RSI. Wrote a couple things up here. So RSI, it stands for Relative Strength Indicator, right? And so it's an oscillator. And so what does that mean? It has a range from 0 to 100. So it calculates relative strength, and I can try to show that here. Let me go to a less messy chart that I don't have. I'm not talking about messy in terms of price, but just something where I don't have all the trend lines and pitchforks and everything drawn in there. So let's just take a look at Bowen real quick. So the tool here. Let me copy this. Copy. If it copies, of course, it's not responding. Hold on. Can't ask my computer to do too much. I do have some dreams of, you know, of a brand new one, so it'll be coming pretty soon. All right, so this is the basic calculation, the first step for a calculation in RSI. It's 100 minus this quantity here, right? So 100 over 1 plus the average gain divided by the average loss. So that's your first step for calculating that. And I have all the links to Investopedia, which gives a little more detail on it, right? So one of the things to remember here is I have this code in at 13. I think the default is like 14. And anyway, what it does is the next calculation that it uses. I'm not going to get into too many calculations tonight. I'm just going to do it only on this one, just because it was interesting. In the next step, once you have enough data, right? So what it does is it takes, you know, in this case, it'll take the previous 12. The previous 12 values there, right? I call it period, and incorporate that into its calculation, right? And so what it does then is gives you a value, right? And it plots it. It plots that value. And so what happens is the RSI goes up, right? It goes up, you know, based on these calculations. So it rises as the number and size of positive closes increase, right? So what it's doing is showing, as it's going up, it's showing that there's positive closes, right? So a lot of green days, right, going up, right? And then it'll go down and fall as the number and the size of losses increase. So as you get bigger red days, right, it starts to go back down, right? Pretty obvious. I mean, really, if you look at the flow of this chart, right, it kind of matches the flow of the RSI, right? No rocket science going on there, right? It's like, oh, the market's going up. Oh, RSI is going up. Imagine that. So it really doesn't, in terms of direction, I mean, you can just eyeball, you know, the waves of a chart or the flow of a chart and tell which way it's going, right? And that's what we do when we look at our futures indicators. When I post the Spark charts, you can see, you know, what direction the futures are going, right? But this is just a quick and easy way to look, right? But the key is, the important part of it is that it can help you, right? And it can help you spot pivot points and changes in trend, right? And it's really good and really effective when you're doing when you're analyzing Elliott wave, right? Because typically an Elliott wave, let's see, I had a good one the other day. Typically an Elliott wave, and Walmart was great. Your wave 3. Let's see. Yeah, here. Your wave 3 normally appears if you have some sort of power gap up, right? Usually indicates a wave 3, and then what happens is your wave 3 over and so basically anything over 70 and less than 30. Over 70 is quote unquote overbought, and under 30 is quote unquote oversold, right? So typically here, this is a bad line, but the overbought amount is going to be higher than the overbought amount. The overbought amount on wave 3 is going to be higher than an overbought amount on wave 5. So that pretty much confirms, you know, certain wave counts, right? And so here you can even tell this was the high, right? So I mean, you can't get any better than that on an Elliott wave. Your fifth wave up, you know, represents a lower high on the RSI. And what that is a bearish divergence, right? So to show that there's going to be a trend change happening, right? So you've gone up here, right? And it's already kind of started happening, right? As this is coming down, right? You're already starting to move down. You're never going to, with RSI and all that stuff, you're never going to catch a perfect top, right? But it does help if you're applying it with other principles, right? So when you see this kind of divergence here, you could, okay, look, this is done. So I'm probably going into a downtrend next, right? And so, and I just kind of want to now point out. So that's one of the big tools right there, right? Another tool that you can do with RSI, which is interesting, is this right here. You can do support and resistance. Now this doesn't quite match up with the chart itself. Although in general you can see the trend of the chart by watching the RSI. It's still going up here, right? But you're getting bounces, right? You know, for the most part, I can just draw kind of like a little range area here. You're showing bounces in the RSI, right? It's showing support and resistance, just like you would see on a regular chart. So here, as it's going up, it's not really breaking below this support line, right? And it comes back up. Now, when it's finally had this divergence here from 3 to 5, what happens is, right, you start your, my opinion here is a wave 1 down, right? And so, but look what happened. So it finally broke this support here. And if you can, let me try to zoom in there so you can see a little bit better. So here, it broke support on this line right here. But look how close you were to the top, right? That should have been the clue short on Walmart, right? And I was a little late, get better, you know, going through the watch list and trying to do was out as well. But here you can see, you know, we put in a nice, you know, pause bar here, and then we finally broke through that support, and that probably would have been the ideal time to go short on Walmart, right? And so, you know, came down, that would have been a good trade to here. It would have bounced off, probably freaked me out at least, and I probably would have covered. And then, you know, and then you can see here, by that point, you know, you're kind of getting into the oversold territory. So it would have been hard to manage. But if you know, if you had trailing stops and, you know, maybe, let's say you were doing puts, you could have taken off a large percentage of your puts and maybe you had a few freebies going here at this point and then could have rode the rest of that wave down. So that's kind of one of the, that's basically two of the main ways to use RSI. Another one, of course, is you know, finding the bullish divergence where the market's going down and you've got a you know, positive divergence here in the RSI, and you can do it, basically it's the exact opposite, and look for ways to go back up, right? And that's really good, especially, you know, if you get, you know, good at Elliott Wave or you get more familiar with it, you can kind of work on, like, you know, some of these trends, and you can use these indicators to your advantage, right? And so that's really the reason I wanted to talk about that. So there's a reason to all those, right? Next, I kind of want to skip over Stochastic right now. It's just the way I have my chart set up. I want to talk about MACD. Okay, so MACD, as you probably mostly hear it, stands for Moving Average Convergence and Divergence. Okay, so really simple. This is just a default chart here. I didn't do anything funny with this one. I just did it up, put it here for instructional purposes. There's two lines, right? So two lines in this case is Think or Swim. It's a default one, right? This kind of tan line right here, right? Tan line, that's pretty funny. But this tan line right here is your 9. That's your moving average, right? And you can look up if you're ever confused. For some reason, it doesn't pop up here because it shows a new screen. But if you go to Studies and you click on your Edit Studies and then go to you know, your MACD and go to Settings, you can look at what each of the colors mean, right? So it shows you what it is. So the value of the MACD is the blue line. The moving average, your 9 moving average, is the tan one there. And so anyway, there's so that's all basically what it does. And then so you see these histograms on some of the charts, and you can use those if you want to. What it is that shows the difference between, they call the they call the moving average line, the tan line here, they call it the signal line, and the blue line here, they call that the MACD line, right? And so the difference between the distance between those two lines are these histogram values, right? So you can see here the blue is under the tan. It's under it, and so therefore, and the distance is increasing. As that distance between the two increases, the red gets longer, right? And as they start to get a little bit closer, oh, like here, they just got close and they crossed over, right? It went from red to green, right? And then went back over, went from green to red, right? And so as these cross over, right, as this crossover is the signal line, this indicates a bullish move, right? Now, some people say, I've heard some technicians talk about, you don't want to go long even if you're down here, because technically underneath this, you know, in the bottom part of this, most of your big institutions are short anyway, right? So you want to wait to go long basically until you're over here. So you can trade that however you want to, but here you can definitely tell some, you know, some positive divergence here in the RSI, right? So it's showing potential end of wave 1 and moving up to wave 2, 1, 2, right? Back up here, right? And so so what happened, right? And then we had the MACD crossing over the signal line. So it's where the MACD crosses over, right? Not the signal line. It's a little different, right? But when it crosses over that, now you're looking, you know, bullish, right? And as you can see in time, you know, over several days, this is the hourly chart, but over several days, it went back up, right? And so you could have used that in combination with your RSI line to see that, you know, that it was working its way back up, I think, to form like a wave 2. And so, it could have been, ABC back up, 1, 2, 3, 4, 5. Typically, wave 2 is not going to be an impulse wave back up. So, probably larger time scale. That's what it really was based on. But here, yeah, so probably like A, B, C, like, type thing. So anyway, so that's your MACD line, right? So that's your kind of the main thing there. So that's one of the big ways to trade that is your crossover signal here. And then again, another thing you can do as well, earlier with the waves one, well, it's easier to see here. Yeah, so waves 3 and 5. So you had that divergence there. And you can do the same thing with the MACD as well. And sometimes you'll see traders do that. So here we've got a divergence here of a lower high on the MACD, and you can see here it's coming back down. But usually, typically, I would look for that on some sort of reversal area. So something to look at, something to keep in mind. So when you combine these different tools. Okay, and then last but not least, I want to talk about Stochastic, and I use this primarily when I'm working on pitchforks, and just because of my studies of pitchforks, I found that it's been one of the more effective tools for that. So what I want to do is let me go to Netflix, because I had a request to go over Netflix tonight, the chart. So Clayton, if you're online, well, what's up? Welcome. All right, so let's go to. I'm just going to start here with this. I'm just going to do a full analysis of this one, just on the different time frames, right? So we're looking at Netflix here. This is your monthly, right? So we've had had a huge red month back in October. November took it lower but came back up, right? Gave you kind of a spinning top month, and now we're a thick red month right now for Netflix, but it's also inside right now. So we're not even halfway through the month. We're probably going to be gapping down a little bit. So we'll see if this level here. The low of this is 250, of course, nice whole number. If we break that to the downside, that could be a 250 break would be pretty imminent. Okay, so that would be a very big position of weakness if it takes that out, right? Then your next pivot is going to be here, right at the 235, and then it could even go lower, right? So that's how you watch the monthlies, right? And on the weeklies, you can see we do have 3 higher lows on this, but we've got a very big red bar here, so we'll see if it continues to take out again the prior week's low, and then the prior week's low after that, which would be your 250 low, which is right here. Okay, so the weeklies are going to lead you to that, and then of course the dailies. Okay, the daily candlestick had a big red bar, pretty much engulfs the prior day. I'm not sure if the body of the bar engulfed it, but certainly the whole bar did. Yeah, the whole bar did, not the entire body, but still, it's obviously looking very weak there, right? And so, boom, it looks like it wants to take out here, take out there, and then ultimately take out that 250. And if it could do that, look out below, right? Okay, so that's kind of, and then the hourly, it gave a nice, what was it, inside 60 anchor here, right? So when we look at 60 is the prior day, obviously we're probably going to be gapping down tomorrow. If we get a little bit fade back up, you want to see how it handles this inside 60, right? Just like you would normally trade it inside 60. See what it does when it comes back in the range. If it can't take out this top with any sort of authority, we'd look to short it right again back below 264.01 to follow that trend, that pattern, to try to target these guys here, right? Okay, so then moving forward go back to the hourly here. So this is what I had, the last chart I have. I usually do those charts. I usually do 4 monthly, weekly, daily, hourly, and then I go back to the hourly and do another follow-up chart, usually with pitchforks, right? And so what I did was, and I can, what I'll do is, let me see how far back I can go. A little harder to draw here today. So what you do is you go to Andrew's pitchfork, right, down here, and you draw. What I did is I found this line to be interesting, so I draw this pivot here, to here, and to here, right? And so that gave this pitchfork range. And the reason I pick those is because I look for somewhere where the median showed an effective pivot, right? So to show that there was some resistance there, right? And so here, Netflix came up, put a pivot here, came back in, and this here is the bottom of the pitchfork, the blue line, right? And then you draw another line, here from the point of the pivot to the bottom of the pivot straight, and that's called your trigger line, right? So what Netflix originally did is it broke through here, broke to the bottom of the pitchfork, broke down, broke through, broke through the trigger line, right? And it looked like it was really going lower, and then it hit 250, came back up, broke through, kind of came around again, and then it got back in the range last week and was looking like the strongest of all the FANG stocks, right? But notice here, and I drew a reaction line. The reaction line goes through the pitchfork main line, and then I just take a channel and I draw it out here, and I found these two, right? It looks like it was going through two pivots here, and I just duplicated that and carried it over here. So every action has an equal and opposite reaction, right? And so now it comes up and hits this reaction line essentially, and now it's kind of coming back down, right, and working on this. So we'll see if it's going to follow this reaction back down to 250, and then possibly I put, what did I say, like 235, 236, and see if it follows this down, you know, possibly tomorrow if we got down here. You know, we could end up by the afternoon tomorrow, potentially down here. So just have to keep an eye on it, and that 250 is going to be key, especially watching it on that weekly and monthly time frame to see if it takes you back down. Anyway, back to stochastic. So stochastic is a momentum indicator and oscillator, and there's two lines on it, right? There's the %K and the %D, right? And so each one is defined mathematically, right? So the just to show how they have it on here, your K line is the red one, okay? So the red one is the K line, and the D line is the, you know, the purplish one, okay? And so each one is calculated a bit differently. There's a mathematical formula for each one. They involve price, and they involve the low and the high of 5 previous time frame bars. So on the hourly, you're looking at the highest and lowest prices of the last 5 cycles, right? So in this case, hourly, so the last 5 hours. So it just happens to work pretty effectively on these on the pitchfork. So here, this is an example as it came up here and pivoted, right? You notice here that the K was putting a pivot and crossing through the D, right? And so that's one way to look at it. It's like, okay, I'm definitely pivoting here, right? And of course the RSI is doing the same thing, and the MACD is doing the same thing too, but just from my studies, the stochastic was a good one to look at, you know, to see where these pivots are coming in. And now here, we're kind of in no man's land. It looks like we're kind of testing back up, but my guess is it's probably not going to get back over this trigger line, and then it's going to come back down, right? And so so we just have to see how that trades out tomorrow. Now, interestingly enough, the MACD is showing, you know, basically railroad tracks here, boom, boom, pointing straight down. So that's also, you know, a very bearish indicator too. So, so yeah, that just kind of shows you basically how the stochastics work too. There was an interesting comparison, and I believe it was on Investopedia that compared. I think I posted the link. Let me see. MACD versus. Let me put. I'll put the link on there too. Let's see. Stochastic. Yeah, let me put that there. I'll just add that link to the, so I don't forget, to the YouTube at the bottom of the YouTube page. So it'll be there when I post the, you know, post this video later. Anyway, so so ultimately, what they say is that okay, so stochastic oscillators were created by George Lane, okay, and he believed that prices tend to close near their highs in uptrending markets and near their lows in downtrending markets. So with the RSI, ultimately he was saying that RSI is better for trending markets, and stochastics are more useful in sideways or choppy markets. So that's just something to keep in mind for when you're, which one you want to use, right? Right now I think we're downward trending, and so I think probably more effective at this point, you know, the RSI is going to help the best, but I just usually keep the stochastic on there just for the, when I'm looking at where pitchfork pivots are. But it looks like RSI could be almost just as effective. But yeah, basically everything appears to be, you know, pretty much pointing down in this case. So, so that pretty much covers those. I wanted to go over, we had a bunch of, so that's pretty much the lesson there, MACD, RSI, and stochastic. So, and we went over Netflix there too, so hopefully that helps. We've got a bunch of 30 orbs from from Friday. The orbs again are the opening range breaks or the opening range bars. So they were basically anything that was a 15 bar on Friday will then become a 30 bar today to look for some potential continuation in the direction of that trend. I wanted to look at mRNA, which is I posted this yesterday. We made a quick 30 cents on it on the orb here, right? Well, it could have done a little bit better. That was the 15. So the high here was 22 on the first 15-minute bar, which almost doesn't seem right because I was watching it. That ended up being it, but it's hard to do on the IPOs. But you can see here 22 is the break. Eventually hit 22.75. I actually traded this one. I think I even posted. I said 22.40 was my entry, so it was a good quick 30 cents. And then take your profit, move your stop up, whatever the case is. And clearly after that, it went down. Unfortunately, it's very difficult. I mean, unless you had shares when it went public, you can't sell, right? It's hard. I don't think you can get shorts. I mean, if you can, let me know. But pretty sure you can get shorts on an IPO. So pretty much you can only go long on those. So we'll see. This was big, hyped up, brought up by Morgan Stanley. Supposed to be a big mover. Didn't move on Friday. Obviously, the market. I even tweeted. I said they picked a horrible day to do an IPO, but they still did it anyway. So we'll see. We'll see if we fade in the morning. If we fade back up, if the futures end up pointing back up, this is definitely one to look at Friday morning on a 30 ORB. So I mean, let's say it puts in one here at 19. It could at least test the highs, right? So if it puts in a nice 30-minute bar here, it could at least try to test these highs up here by the end of the day, which would be a much better trade. And there's a couple other ones, couple good earnings. I'll look at Yelp, Lulu, Broadcom, Ulta, and Big. And then the only thing I have on the 15 orb list right now is Guild, but we'll see what kind of news comes out by tomorrow, and I'll post those tomorrow. And that's pretty much all I got for tonight. I hope that was helpful. I think it's going to be an interesting week this week. We've got, I'm guessing a lot of volatility going to be happening, a lot of swings, high and low, and things like that. So there should be a lot of action this week too. So just be real careful, this week. Just if you're not super confident in a setup, just go lighter than you normally go, and to see how it works out. Just test the waters and see how they go, because we've been seeing this thing whipsawing a lot. So yeah, we could be gapping down huge, but we've seen, what was it? I was looking at Amazon the other day. It was like. Yeah, I mean, we had this huge down. I mean, it gapped up, right? And then with this huge 105 point range here, the downside gap down, then back up another 92, and then Friday back down, another 93. So yeah. We might see another week like this too. I think we're probably going to see a lot of weeks like this too. So it should be pretty interesting. Obviously, things will slow down, for the Christmas holiday. Usually that's a pretty bad week to trade. So just be careful with that as we get there. My hypothesis, my theory, is that we're going to see a bunch of down days. And as option expiration hits on the 21st here, I don't know how far down we're going to go, right? I mean, we could go, let's go back to the SPX one more time. If this thing really wants to go, I mean, it could move. I'm not saying it's going to do it in 1 week, but, that's a wave one. It could potentially wave two, wave three. I mean, it could see this mid, almost pretty close to 2400, right? My guess, though, is if it does do that, or we have a huge move to the downside, the 22nd, right after option expiration, we might see a pivot to go back up. Now, I don't know how far back we're going to go. It might just be that wave 4 retracement. It might be a small retracement, but I think we're probably going to see, if there's some selling going, my guess it's going to go, we might see some sort of reversal or some sort of pivot, by the 21st, like around here, and it might be right here at this pitchfork area, this 2330 area, and then we might see like a little bit of rise into the new year, and then we'll see what it does from there, see if it puts in a pivot at this median line, whatever the case is. So I don't know, who knows? We'll have to see how the price goes. That's just one little theory I've been kind of throwing around right now. So anyway, kind of gives a perspective. I mean, who knows? We could be gapping up in the morning and just rip to the highs. That's why you just got to wait, trade price. If you're ever not confident, just don't trade. But remember, you can always look at those, go back to the 60 anchors too, and look at those in the morning and see how they trade too. So at this point, if anybody's got any questions or any chart requests, I'm happy to field those right now. You know how to do it. Just throw it in the chat box and I'll respond to it. But yeah, I mean, that's pretty much, definitely. Hey, what's going on, Thalasi? How you doing, man? Clayton, great to see you. Appreciate you joining. Shirley, how are you? Always appreciate your requests. Yeah, so Cron, right? So, interestingly enough, how did Mo do? Mo's been dealing with those acquisition stuff, but guess what they're doing? They're trying to buy pot stocks, right? Or wellness stocks, whatever you want to call them. But these type of stocks, were all green, right? Now, granted, they didn't have the best looking charts last week, but as we tend to go into a downtrend, right, as sentiment goes to the downside, your beer stocks, like apparently these wellness stocks and all that stuff are probably going to be ones that you might look that are going up, or however you want to look at it. The fact that they're going up could show that we are going into a downtrend. So it's very interesting. So Cron had a huge gap up, right? So this is a good one, Shirley. This one is definitely one that we will add to the 30 orb list for tomorrow if it's not on there. In fact, I'm going to replace. These are all pretty good. AVGO maybe. I'll just add it there. Yeah, but Cron, that was good. That's definitely one to watch, the 30-minute orb for tomorrow for Cron. I mean, it could reverse and fill the gap, certainly. I don't really recommend reversals just because they're a little bit more advanced, a little more risky. So I would just watch it and see it gapped up, see if it takes that 30 orb to the upside tomorrow, and just preserve profit. Just move your stop up to profit and see if it runs. Tesla, good one. So that is interesting. I retweeted Trader Stewie had tweeted. He said it looked pretty bearish and all that stuff, and I really respect his the way he looks at things. And so, in fact, it does. Just looking at here at the daily, we have this pitchfork here on Tesla. Last time it put in a key reversal bar here as it stepped out of the pitchfork. It had a couple solid days down, right? Gap down and kept going, right? Here, it basically did the same thing. It tried to get through the pitchfork, tried, blasted through it, right? But notice how it's right on a reaction line, right? So you just have to watch. Is it going to break through it again and then travel back up, or does this reaction line saying this is over, like it did here, right? Essentially, and see some more downside. If it does, then it might get further movement down. I think back down to this 320 range is definitely possible. For it. So, but we'll see. We'll see how it handles this area. But it is below it right now. If everything's gapping down and it gaps down with it, there's no saying that it can't. I mean, you don't know what kind of news could come out. They could say, China factories are closing, and then once that news, European factories not going through, whatever the case is, right? Boom, 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 right? So, just definitely want to keep an eye on there. So. And let's see, monthly. The monthly's turned red. The weekly's turned red. Last week was red. We've got this, key reversal bar here at a reaction line underneath. Underneath the pitchfork, and then here, just really weak on the 60s, right? That's a very bearish movement up and then down at the end of the day, right? And then, yeah. Looks like it could continue further, right? You got your RSIs pointing down, Stochastics pointing down. Now your MACD is curling over, right? How's your signal line, right? Cross right back through here, cross right back through the signal line too. So interesting to watch, right? And so here, as we looked at the RSI today, this here, it's right at key support, right? So watch this RSI tomorrow. This RSI gets below 45 and breaks down. Right, it's like breaking support, right? We saw what happened last time it did that here. Came all the way down to here. So we'll see what it does this time. If it bounces back up, then it holds support, comes back up, probably travels back up the reaction line there. So definitely worth looking at. AU, yeah, definitely looking at the gold, gold type stocks. So let's see how they've been doing. Yeah, this I like how I remember you mentioned it the other day. I like how on Friday it kind of paused. This is actually pretty good, right? Because like nothing goes up, perfectly all the time. So I like this. I feel like it's trying to put in like a little pivot. Might go a little bit lower. See how it handles this low, 11, 20 area, and then see if it puts it in a reversal bar for you, and then comes back up. I like how the MACD is still pointing up. I like how these are pointing up. The RSI is still high, right? It's a higher high than before. So let's see if it just kind of consolidates for a little bit and then comes back up on AU. And then ABX is those are our miners, right? Or Barrett Gold. Remind me. I thought it was a gold miner. What is this? Barrett Gold Corp. Anyway. I hate when you hit the wrong thing. Okay, so here, clearly, there's been some good resistance. There. Right? And it's now above it. Right? So see how it handles that that resistance. Certainly as the market the market continues lower, these gold, any gold stocks, gold is likely going to be a bit higher. Natural gas is higher. How's the GC look? See gold right here. Gold futures are over 1250, right? That's big. It's had so much trouble getting over 1245. The gold futures has been really breaking out here. So I've got a pitchfork here on gold. It's back over the pitchfork. This resistance has now become support. It's really working its way back up, right? That's huge, right? So definitely great ones to look at, absolutely. Awesome stuff. I appreciate all the new folks joining and everything. Just tune in. I do. If you can't catch one, just check the video like the next day or whatever, and you can always watch them in double speed too, just to kind of get through it if I just kind of drag on. And yeah. Oh, let's see. Apple not looking great. Do you believe the market can turn around without Apple? Clayton, good question. Obviously, it can do whatever it wants to. Yeah, I think so. I mean, anything could happen, right? Apple. Here's the deal with Apple. Apple's on all the main indexes, right? It's on the Dow, it's on the Nasdaq, and it's on the S&P, right? So anything that Apple does is going to affect the overall market, altogether. Still, you know what I'm saying? So it doesn't necessarily mean it's going to drag everything down, but it's definitely going to affect it, right? But I have seen recently, a lot of the the Nasdaq and a lot of the other FANG type stocks going green, while Apple's been going down, right? And so we'll see. Apple's now used to be like the most loved of all stocks as it hit like the $1 trillion market cap, and now it's like the least favored of them all, right? So iPhones aren't doing well. It's starting to get bad press, things like that. Getting a lot of downgrades recently. So yeah. So I mean, I think overall the markets are pretty much downtrending right now, and so Apple is just one of those ones that just is getting beat up, and it's hard to tell. Oh, I do want to say, but yeah, here we're on that reaction line here. It looks like if it can break through here, I think it could see definitely 160, and it could even keep traveling here, down to 135, 140 before the end of the year. And I think if it does get there, I think, like I said, this is a key part here with this option expirations here around 12/21. I think if we do see a bunch of downward moves, I think that might be a good date for a pivot. We'll have to keep an eye on that. Yeah, and so on Google too, just keep in mind Google CEO is going to be talking to Congress, I think on the 11th, so on Tuesday. So that thing should get pretty wild too. So just keep an eye on Google this week. It is right at the median line of this pitchfork right here, and it looks like it could potentially go lower. I can't imagine they're going to have much good stuff to say. But we'll see. So yeah, it should be an interesting week. I appreciate everybody for tuning in, and we'll catch you guys tomorrow night. Just to go over how things are, how the things go tomorrow. All right. Have a good night, everybody, and we'll catch you tomorrow. And I'll post the game plan too in a little bit.